Hello, it's Robert Miner with Dynamic Traders Group with the DT Trade Strategies video for October 28th, 2020 for our Twitter and YouTube followers. My reporting these videos have been kind of sporadic over the last 2 or 3 weeks for a couple of reasons. Number one is I've taken some time off. I have my stepdaughter's a senior in high school. We've been touring some universities and making applications for that for next year, as well as the last couple of weeks I've been working at an early voting polling place here in Greensboro. So I worked there about 3 days a week because I had read a couple, 3 months ago how they were afraid they weren't going to have enough people working at the polling places to keep them all open and available for voters. So I volunteered to do that, and so that's what I've been doing. Last day's tomorrow, though. So for those of you who are U.S. citizens, I'm assuming you have registered to vote. Just make sure you vote, okay? Every state has some sort of early voting or absentee ballot. Don't mail them in because, as you're aware, there's probably not enough time for them to get received, or possibly may not get received and counted. But it's really, really important that we vote, particularly in this election. I'll actually have more to talk about the election and the aftermath for our DT Report subscribers in about a week or so when we update our big picture report for the stock indexes. So far, things are kind of working out as anticipated about 10 days ago when we did the last video and kind of featured gold and the S&P. Some potential setups, some potential strategies where I emphasize that we want to learn to trade, not to forecast. So let's review those two, which is kind of exciting right about now, and see what might be coming up in the days ahead. So this is the SPX daily data. And if you'll recall from about 10 days ago, I think it was the 18th or 19th, whatever that Saturday was, when the last video was done, is that we're looking for a probable decline in the S&P. Not necessarily a major weekly top or a weekly decline, but one that lasts at least a few days. And as I usually say when we have trade strategies in our DT reports, is we look for at least a smaller time frame reversal, in this case on the daily, that may evolve into a higher time frame reversal. In this case, it would be a weekly reversal. So indeed, we had that occur. And in our reports, in our DT Trade Alert reports, actually where we give specific trade recommendations, is we had a short trade from October 14th. That was just 2 days after the recent top anyway. And we exited half of that position, that short position, on October 20th by the close on the 20th for, it was a fairly small capital gain or small gain. And we also recommend that you can either go short like the SPY or you can use bear market ETFs. There's lots of different vehicles that you can use. We usually track it long or short the SPY, but you can also use leverage vehicles as well. So we had a reasonable gain there, short-term gain of just a few days. And then because of the trade strategies, we only exited half the position. We always do trades with multiple units, at least 2 units. So we will frequently exit 1 unit fairly quickly for various technical reasons, and then we'll keep the stop fairly wide in the other unit in case it continues the trend. Well, that's certainly what happened, isn't it? Here we are today. I'm recording this on Wednesday afternoon, about a little before 3 o'clock. And of course, we have this really big gap down day today. And of course, on Monday, we had the wide range down with a much lower close as well. So we're still short half of that position, or one of the units in that position. But why I wanted to bring this to your attention is a couple of things. Number one, remember, we trade, we don't forecast. And so we're trading, we're holding one position short with a stop fairly ways away from the market. But what we want to be aware of now is a couple of things. Is one, we have a couple of time factors. Here's just 2 of the key ones that's actually today into Monday. Today is the 100% low to low to low. So it's at least a time we want to be alert for a potential daily low that would last at least several days. And then Monday is a pretty important one. That's the 100% alternate time projection of the September 2nd into the September 24th low. So we can look at this and say that more than likely the maximum time before we complete at least a daily low would be this Monday. And of course we know that's the day before the election. And any time from today over the next couple of days. And we also take a look at our daily momentums, and we're reaching a dual look-back oversold position. That itself warns us that we should be within a day or two, or 3 at the most, of making a daily low. Momentum cycles are actually more reliable than price cycles, so you always want to be aware of them. So be aware of that over the next few days. I'm going to show you one more thing. Well, first, before we go on, look at the weekly chart and potential trend. I hope you also remember from that video of about 10 days ago that should we close below the October 5th close, again, it wasn't a forecast 10 days ago, but it was something I said, be aware of this. If we do that, more than likely we have completed a corrective rally. In Elliott wave terms, we call it a wave 2 or B rally. What does it mean when we complete a corrective rally? Well, usually then the trend prior to the rally continues to a new extreme, in this case, to below the wave 1 or A low, what I got labeled that wave 1 or A low in September. So we made that close, that lower, the close below the October 5th close this past Monday. So as of this past Monday, or the assumption has been that we've more probably completed a corrective advance, and eventually, not immediately necessarily anyway, but eventually the stock indexes, the SP, should continue to below the September 24th low. So that's a pretty important piece of information, not too far below that level at 31.71. That's the 100% alternate price projection of the September decline. So that would kind of be a minimum downside target in the days or weeks to come. So let me go back to the weekly. Remember, we always look at everything in dual time frame. So we just looked at the daily, where the immediate trend probably is. And so this is really important, is the weekly momentum, the 8 look back, is probably going to make a bear reversal this week. So the week isn't over, needless to say. We've got a couple more days of trading, but more than likely, we're going to make a bear reversal in the weekly momentum without even having reached overbought. And so more than likely, we're going to continue lower for a few weeks. And I did show you the 6-week reversal cycle in that video about 10 days ago. It's not shown on here, but that was one of the reasons we anticipated that even though our momentum was not overbought, is more than likely we were going to make a weekly high. So it's pretty important. It's stuff you want to be aware of. And so if we close the week with a 8 momentum bear reversal, then we should be sideways to down for at least another 2 to 3 weeks. 2 to 3 weeks. So, and that's pretty significant pieces of information. Of course, we follow up on this every day in our DT reports. So let's take a look at the other market that we looked at, and we've looked at several times over the recent months, and that's the gold market. So the quick review on the SPX is sideways to down for another day or two, probably at the latest into Monday. Then we make what we call a daily low. We'd have a corrective advance followed by a continued bear trend, probably for another 2 to 3 weeks. That's what the technicals are showing us. So hopefully you've taken advantage of this decline as well. Let's take a look at gold. So this is a gold daily chart, and let me just put my crosshairs of the cursor here where we were. There we go. That's Friday the 16th. That would be when we made the last video. And the trade strategy here, again, we don't forecast, we identify conditions with a high probability outcome. The trade strategy was following the next daily momentum bull reversal as long as price had not closed, as long as gold had not closed below 1894.60, would be the initial setup, dual time frame daily weekly momentum setup for a go long trade. Then we'd have the daily and the weekly momentums both in a bullish position. And the trade strategy we usually use is when we get a dual time frame momentum reversal, in this case bull reversal, when both the daily and weeklies are in alignment, we then look for a close above or some other trigger to enter the trade. And one of the simplest ones is a close above the closing high at the last daily momentum bear reversal, is in the opposite direction. So that was at 1928.90. So for instance, in our DT trade alerts, which we give specific go long, go short, buy and sell signals and trade management and all that sort of thing, is we said, okay, we've made our dual time frame momentum bullish setup. Now we want to go long on a close above 1928.90, but it wasn't just a blank go long on the close above that. That will be our reversal confirmation signal, and that's when we then develop a specific entry strategy. Why would we not go long on that signal? I'm just advancing this one more day. I've got the crosshairs on Tuesday. As of Tuesday, the fast line of our daily momentum was already overbought. So when we made the go long or the bullish confirmation signal of that higher close, then look down below here. Our daily momentum is overbought. It's in a position from when a daily high is typically made, and it was also the exact date, October 21st, of when we anticipated, timing-wise, a daily high would be made. Do you want to go long, enter a position, when technically you're probably at or very near, in this case, a bearish reversal? Well, of course you don't. That's why you have to, as Gann said, use all the tools all the time. So we had our dual time frame momentum reversal back on actually on Monday. We had our confirmation on Wednesday, but we didn't go long. We didn't have a recommendation to go long because we're at time and we were at momentum to complete a daily high. So the next strategy would be the weekly momentums were still bullish. We had the potential that this was a wave 4 low, pretty significant low potential for that, is that if we made the next daily momentum bull reversal following without having closed below 1894.60, that would be the next dual time frame momentum setup to then initiate a specific go long strategy. Well, that happened just yesterday on Tuesday. So what's the strategy? Well, the strategy is the same as before, that we've made a daily momentum a bull reversal while the weekly momentum was bullish. So then we want to make a close, otherwise some follow through, a reversal confirmation of a close above 1929.50. Well, today has scrapped that potential strategy. So we don't have any immediate go long strategy, and for another good reason. Let me go to the weekly data, and that's because things have changed in this past week. Here's our weekly data, and of course this last bar is not complete. It's just through Wednesday. We got a couple more days to finish the week, but more than likely the weekly momentum is going to reverse to bearish. That's significant. That's very significant. And so now we don't want to even be developing any go long strategy if the weekly momentum is going to be bearish, and we'll certainly know by Friday if we make that bear reversal in the weekly momentum, because that would mean we're probably going to be sideways to down for at least a week or two. And the reason the downside is probably not going to be real significant is that it would be making a bear reversal not far above the overbought zone, and the 13 is not far above the oversold zone, and the 13 is already bullish from the oversold zone. So that's going to put kind of a floor on the downside. But it would mean we'd have probably another week or two. We'd have to wait to initiate any kind of go long trade. So again, we don't forecast the markets. We look to identify trade strategies with a high probability outcome and acceptable capital exposure. So if you're interested in this kind of analysis and learning specific trade strategies and trade management, check out my book, High Probability Trading Strategies, and check out our DT reports, where we have a trial available for $19 for 1 full month for new subscribers. Take care, wear your masks. If you're in the U.S., vote, get that done. And I'll hopefully be back with you this weekend sometime with another update, and eventually get back to our regular schedule where each weekend and each Saturday we have a new video for you. Take care.